So with that, I'd like to turn it over to our first session of today, and I'd like to welcome Scott Harkey and Javier Valverde.
Hey everybody, thanks for coming out. I am Scott Harkey. I am the head of our financial services and payments practice at Endava. We are an IT services company headquartered out of the UK. And I'm excited today to have Javier with me. We're going to talk a little bit about AI. There's a whole nother room focused on AI, but we're going to talk about AI in the context of regulation and talk a little bit about how we see it impacting regulations impacting the industry more broadly, and try to merge those two topics together a little bit. So to kick things off, Javier, why don't you tell people about what you do? Javier is with Mbanq, and tell people a little bit about what you do.
Hello? Okay, works. Well, good afternoon, everyone. Good evening. Scott, thank you for the amazing introduction. Jennifer, thank you as well. This is my first time in Atlanta, so I'm really excited to kind of just come to the city. I was pleasantly surprised. I'm, grew up in California for the last 33 years and moved to Florida, and now I'm really enjoying the East Coast, and especially Atlanta. So Atlanta is a beautiful city, and the Mercedes-Benz Stadium is quite impressive. Anyway, good afternoon. My name is Javier Valverde. I'm a co-founder and SVP of corporate development for Mbanq. Mbanq is a banking as a service provider. And what that means is basically we allow and enable brands, credit unions, and banks to launch financial products and services. Mbanq, what it does is basically it offers white label mobile apps. It's able to have open APIs. And last but not least, it seamlessly integrates with a lot of software providers. So a lot of the heavy lifting with brands and credit unions and financial institutions is significantly reduced. And one of the biggest things that I really enjoy is that we're able to see kind of cutting edge technology along with working with best in breed innovators to support these AI use cases that we're seeing today. I think the biggest thing for the future is incorporate these AI technologies within everyone's software, because I think a lot of the things that we're seeing right now do have practicality and they have different problems that are presenting to us business cases. So I really look forward to deep diving into the AI and how regulators are looking to utilize it.
So you have practical, applicable knowledge is what you're saying, right?
Yes.
Not just theory here. So the first thing, AI is a fun topic because one is really exciting to talk about. Everybody's excited about it, but it's also a bit daunting because it's got so much hype that everybody talks about it. And so I like to always ground the conversation like this, and where are we seeing the real impacts, right? We're going to dive into the regulation kind of more broadly, but when we think of the impact of AI on financial services, where are you seeing it really impact workflows or processes or the way businesses are utilizing it?
Yeah, I think it's definitely going to have a significant impact in the real world. And one place in particular is financial services, specifically lending. I think we're all kind of used to lending how it is now, where you apply online and you're getting approval for a loan, right? And that's great, and I think it helps a lot of us who need a short-term loan. Now, having said that, I think with AI, where really the capability is going to come across is being able to give a 360-degree picture profile of a borrower, right? So we're all kind of familiar with it, where we get the approval, but what if someone goes through a natural disaster, right? Especially on the East Coast where hurricanes come, and when a borrower experiences that, they need to start refinancing the mortgage. So the lending profile of that borrower becomes very, very tough. right? And it's the financial institution's job, and I think, to have those AI models to give a true picture of what the borrower is capable of doing. So I think that's where we're going to see a lot of real measurable impact in the next 3 to 4 years, where AI is going to deliver true value, especially in the lending space.
It's an interesting example given all the headlines coming out of Florida. You said you moved to Florida, right?
Yeah, so I actually experienced myself Hurricane Ian. I wasn't affected as much as others, but I know that this is a very hard thing to go through. So I personally went through this, and I was luckier than others, but I really had to work with my financial institution to get the proper need that I had to get. So that's why I see the AI coming in and helping, and really being a disruptor in a lot of lending areas, and giving a full picture of the lender's profile.
So one of the other dimensions of AI that I think about a lot is I've been working with technology and financial services for the last 20 plus years, and there's always waves of tech that come through, right? Whether it's blockchain, or I did a session last year at Nacho on the metaverse and payments, and at the time it felt like, okay, this is a thing, or it's starting to get some traction, and then 6 months later it's like, yeah, maybe not, or maybe 10 years from now. What feels different to me about AI is it feels like that the use cases are obvious. The challenge is about harnessing it, right? The challenge is about how do organizations deal with it in a regulated environment? How do they manage data security or data privacy? How do they stop employees from just using it and feeding data into it that then comes back to haunt them? How do you think about that? And does that resonate with you, or do you feel like it's more like a typical kind of hype cycle of technology?
No, I think the hype is definitely real, and especially the hype is about managing its capabilities. So the way I think about it, AI really is it's a balancing act, and it's a balancing act between our human values and the benefits it has to society. So let's take the mobile app, for example, with the phone, right? We're so used to that technology now, right? It facilitates movement of messages. You can approve a payment with a push of a button on your phone, and you can easily connect with everyone globally, right? So those three are practical uses. No one is disputing AI's practicality. That's not even a discussion point. The discussion point is managing its capabilities to make sure that it aligns with our human values and it benefits society as a whole, right? A completely different problem to have. There's a lot of industries that are starting to use it. So I think for us to be successful is that we need to come up with a robust framework to manage AI's capabilities. So that's going to take a lot of effort from regulators, from businesses, and consumers to get aligned with the human values and how it's going to benefit society as a whole.
So let's dive into the regulation bit, right? If we think super high level, is the role of regulation to bring order to all this, right? If we say the challenge with AI is managing it, is controlling it, is leveraging it in the right way to uphold, whatever the objectives are, is that where regulation helps, or is it going to hold it back in some way? Is regulation an obstacle that prohibits progress?
No, I think that's a very good question, and I think it's where you stand on the line, right? So if you're the regulator, you should think of AI as a safeguard. If you're a business, then you're probably going to say, hey, I need this AI technology to benefit me. So you don't want the regulator to slow you down. Now, one example that comes to mind, which every regulator in financial institution has to deal with, is SARs, so Suspicious Activity Report. And those reports take a long time to fill out. You need to investigate, the amount of money that's being transferred to make sure that it's not an anomaly, right? So that's the first bit. You need to fill out the form. That's the second bit. And the third bit is that you need to have the resources to do that investigation, right? And usually it takes days, if not weeks, to truly understand whether or not that transaction is bona fide and legit, right? So once you submit all of that information, you fill out the SAR report, you have to submit it to the regulator. So from that perspective, I think AI will have a true benefit to the regulator and be able to at least keep these fraudsters at bay and honest. So I think that it's a necessary safeguard to have for the future.
I think one of the challenges that regulators always have is the pace of technology and the pace of change and keeping up with that. In the context of something like AI that is evolving so rapidly and so fast, how do they get it right? How could they possibly get it right? Right? How should they think about where to insert themselves in the process, how they bring about regulation, the level of tuning of that regulation? Just what are your thoughts in general about kind of the practical ways in which regulators should think about how they start to engage and start to actually create some of those regulatory requirements?
Yeah, I think that utilization, it's going to be very tough for the regulator to incorporate it because everything is moving so fast. I think of it as like this cat and mouse game between the regulators and the fraudsters, right? And they're always going to compete with one another. And with AI, the regulator should use it as a shield, right? The fraudsters are going to use it as a weapon, but it's the job of the regulator to really use it as a shield. Now, one example that I think of that, as an operator, I really have appreciation for, we call it the Benjamin Button case. So there was a fraudster who was able to slip through the cracks of KYC. Luckily, there was no account being opened. But I can tell you the KYC, the driver's license, everything looked legit. The date of birth, the driver's license, even the number of the driver's license was fine and all cleared out. There was one issue. The photo was superimposed with someone else's photo. So if you look at the person's image, it was a male of 20 years old. But if you look at the driver's license, clearly that person was 120 years old, right? So these fraudsters are becoming very sophisticated with these use cases, and I think it's really important for the AI, for regulators to utilize these AI engines because that's what the fraudsters are doing already. And this is just one use case, right? Now, luckily, there was no harm, and it benefited, us for catching it. But I really believe that the regulator needs to start using this sooner rather than later.
Are there other use cases that stand to mind as to how regulators themselves can think about leveraging AI?
I think the use case that I would be very excited about is if they use it with third-party risk management. I know it's probably boring to everyone here, but I'm personally on the operational side involved with third-party risk management. And the biggest thing the regulators want to ensure is that, okay, the evidence is legit, right? So what you submit is true and tried. Now, when the financial institution works with you, they expect for you to provide the data within a certain time frame. Now, the collection of data takes a long time. Now, once you submit the data, they review it, they process it, and they get back to you if they have any further questions. However, the biggest thing is keeping track of those service providers, right? So it's, you submit you submit the evidence, the documentation, and then you forget about it. And then someone new comes in, they forget all about you and your service provider and what you do. And as having a tracking mechanism for the regulator and the financial institutions, that use case would benefit because AI, I think, will enable that and not having to go look back and sift through all this kind of overwhelming data. So I think that's the use case that I would really look forward to having.
Yeah, that's a good one. Okay, we're talking about regulations. You said you're at Mbanq, which is a banking as a service provider.
Yeah.
There's been no shortage of headlines the last year about banking as a service and regulators and lots of fun stuff there. What do you see from your lens at Mbanq of the kind of challenges in the space when it comes to regulations and just kind of the perspective you've gathered in looking at that?
I think the biggest challenge is three. One is operational. Do you have the banking operations resources to perform out those services, issuing a DDA, issuing a credit card, filing disputes? Those operational things, I think a lot of the banking service providers don't really focus on. They just focus on the tech and the services, but no one is really dedicating any energy and resources to get the compliance bit, which is very important. So with banking as a service, you can have the best use case, you can have the brands, right? I call it the shiny part, the sexy part, right? But when it comes to a dispute, a customer needs their funds, they want to understand, hey, I didn't receive my paycheck on time, and they file a claim against the service provider, you need to have the personnel, people with the background, to be able to do that investigation and provide a report to that end consumer. Because I can rest assured that consumer is going to complain to the Consumer Financial Protection Bureau, and then that financial institution is going to get a notification. So that's why I think a lot of the banking as a service providers don't really look at this aspect.
And do you guys, are there specific AI products that you have or ways you're leveraging AI today and the things that you're helping banks with?
Yeah, I think the biggest one is transaction monitoring. So this is the biggest thing that we see with Mbanq. A lot of the tools that we use, I mean, obviously one of our partners is AWS, but really the transaction monitoring, because we're seeing a lot of irregularity. A couple of weeks ago, we found a duplication of files. It wasn't anyone's fault, but if we did not have these AI tools, we wouldn't be able to decipher that we had a duplication of ACH files, which led to a little bit of a storm in the teacup, because we thought, our client had lost some money, but in actuality, because of our AI tools, we figured out it was just a duplicate file. So it's really being used in the real world.
One of my favorite use cases that I heard that I hadn't even occurred to me was denial of service attempts. Banks using sophisticated AI modeling to help with preventing additional denial of service attacks by recognizing patterns of those attacks and starting to model out, embed that in the information security, network security layer. Well, I think a lot of times when we think about how we apply AI, we think about the consumer use cases or the user experience use cases, right, and those flows. But something like that that's completely behind the scenes, there's not a user flow attached to it. It's just an infrastructure or an operational problem that we're applying it to was really powerful to me. Yeah. I will pause for just a second. I've got a couple more questions, but are there any questions from the audience? All right, just wanted to check in case someone had a really burning one that they wanted to get out there. Two last questions. One, we talked about the benefits of AI. What do you see as the inherent weakness of AI? Where does it go wrong, or where do we have to worry about, wait a minute, let's not go there because we're not ready for that yet?
Being biased and relying on AI too much. I think the example, I'm going to go back to the lending. So AI does a really good job. It's almost like a perfectionist. If you give it a problem to solve, it will solve it very quickly. Now, the shortcoming of this is that if you try to use that AI model to different areas, for example, let's say you develop a credit underwriting criteria for a specific market, right? It's a working class and in the middle of Pennsylvania, right? And the financial institution develops that model. Well, it does a good job of using AI for that specific segment. Now, what if that financial institution wants to make it a little bit broader and start going after a different target market? This is where the issue comes, right? Because it's so focused on problem solving and doing the underwriting for a specific target market, it cannot be broader, right? And I think that's the biggest limitation with AI, that it's so good at doing its job, it creates a bias for those people that are actually putting the inputs, right? So we need to make sure that the AI that we utilize, whether it's a financial institution or a regulator, it can be applied to other markets or other scenarios.
Yeah, I think that's a really good warning, especially for people that aren't as familiar or haven't started using the models and experienced them. You build a model around a particular problem or outcome you're trying to get to, which is great. But then when you apply it to a different problem or a different outcome, that's where things can go sideways, right? The last thing, just to wrap things up, is we talked about new technology, clearly lots of traction, lots of things to be excited about. How long do you think it takes before it settles into just being BAU, right? We stopped talking about it as a thing, and it just, it's embedded in lots of things, and it's a technology building block, just like APIs and all kinds of other stuff. Is that a 5-year journey? Is that a 20-year journey? How long do you think it takes?
We're in it now. No, I'm kidding. Well, I think a lot in the past, technology advancements, they really have 3 things. I think the first one is the technology complexity, right? That's for sure AI. The second one is the impact on the industry. So that's clear that AI does that. And the last is the adoption of regulators. So those three things, I think, is what distinguishes AI from everything else, because we're already using it and business as usual. So with the mobile app, no one really determined whether or not, okay, we all used it, but we had to, design and curate a specific use case. No one's disputing that. So, in the next, I think, 3 to 5 years, that path is going to be much faster for AI than any other technology, because we're all already familiar with it and we see the benefits of it. So I think it's going to come here faster, much faster.
Awesome. Well, just to prove that point, our entire presentation, both my questions and Javier's answers, were written by AI, and we just read them off paper. So that's not true, to be clear. But it could be 2 years from now.
I tried, but that hasn't happened, so I tried.
Awesome. Well, thank you, Javier. Thank you for your insight. Thanks for being here today, and thank you all.
Thank you.
We have our next session called How Fintech is Unlocking Growth in the Cannabis Industry. So, fun fact, I've actually been to Cannabis Cup in Denver. And what I'll tell you is when you think about Cannabis Cup, you're probably thinking, oh, I'm going to a cannabis conference and I'm going to smoke a lot of weed and I'm going to buy a lot of weed, right? That's not what it's like. And that's not what this session is going to be about either. So whatever you think this session is going to be, it's probably going to be something very different, because that's what cannabis is all about. It's always different than what you expect. And so I will go ahead and turn it over to myself.
Hi, Joe. Hey, Mike. How you doing? Hey, everybody. Want to introduce yourself first? I'll go ahead. I'm Joe Radest. It does say FP Omni Technologies. I actually have been in the payments industry for about 27 years. Spent the first dozen on the corporate side, like First Data and Chase. I've started with about 4 different fintech payment firms. FP Omni's one. I started PayX, which was sold to Repay back in 21. For nice figures. Thank you, John Morris, but I don't see him in the audience. And FP Omni is, we're in the payment space, geared for the cannabis market. We'll be talking about the cannabis market today. No, I don't touch the actual products, so there's no free samples.
Bummer. My name is Mike Breslin. I'm a partner at Kilpatrick, Townsend, law firm here in Atlanta. I'm a litigator by trade. I chair our firm's fintech industry team. I do a lot of work with Joe, a lot of work in the payment space, banking relationships, and ISOs. And I've had the privilege of working with Joe and thinking I helped grow the company and get them to where we are today. But we're going to talk a little bit about that and talk about how fintech intersects with the cannabis industry, where there are opportunities, where there are roadblocks. And if anyone has questions, I'm sure Joe can answer them.
Or you.
Yeah. So I'll kick it up like this. Let's just to be faithful to the title of this presentation. Joe, why don't you tell us how you see fintech unlocking the ability to transact in a compliant and legitimate manner in the cannabis industry? And doing that, maybe start off with where cannabis has been as far as fintech and payments, maybe some of the challenges and how we got to where we are today.
Yeah, so basically, in a nutshell, it's no great secret. There's a difference between the Fed and the state when it comes to rules. The Fed, there was a memo that was passed when President Obama's administration, the whole memo, which shifted federal enforcement to the states. So the Fed basically said, we're not going to enforce this as long as the states take their policing correctly, and they sanction it, and they have licensors and check up on the different participants from the seed all the way to the sale. As far as fintech, it relates in the space. We know that some banks, and there's 8,000 banks in the United States, about 500 of them today actually do transact for the cannabis market. They do depository and or lending services. Some of them do card issuance as well. As far as players in the space, believe it or not, some of your largest participants, and they like to say that they don't support the cannabis space, but they do. Those cash dispensing ATMs, they're situated immediately inside of the dispensary, are powered by the likes of Visa, MasterCard, i.e. Interlink, Maestro, FIS owns NICE, CU24, and let's not forget Frank Masaga's firm, Fiserv, owns FAR. So those are some of the prevalent networks. There are many other networks networks, but those are the four big ones you see, facilitating cash disbursements, which are then used inside the dispensary at the point of sale, and the cardholder information and the licensure can be matched up quite easily. So they've been powering the space for over a decade, believe it or not.
And understanding there's that background, and I guess for anyone in the audience who's ever been at a dispensary, it's very common to find an ATM tucked away in the back somewhere to do cash transactions, but that's also one of the problems in the industry. Cash is bad, and that's an issue that you have attempted to solve. But I wanted to take a minute and explain FP Omni's solution as it relates to cannabis, how you view that as different, why you view it as helpful to the industry, maybe overcoming some of the stigmas and some of the roadblocks that have been
So FP Omni, we do what's called point of purchase PIN debit. And so some of you are familiar with it. You go to the supermarket and you purchase at Publix, $58.12. You use your debit card, you enter a PIN number. That's the total amount of sale. That's exactly the way we're operating at FP Omni. We wanted to make sure the transaction was done in a lawful manner, meaning that the dispensary is in Colorado and you're in Colorado, it's a card present transaction, and PIN debit's the only way to ensure that it's being done at the countertop, so to speak, or delivery. In like California, they allow their drivers to deliver to the doorstep. I got to ensure that it's an intrastate transaction done in person. If the individual John Doe decides to get on an airplane flight to another state, consumer, I don't have to regulate that. That was the only way to ensure intrastate transaction. If you do accept credit cards or offline debit, it could be a keyed entered transaction. It could be done over the internet, i.e. web, and then that product could be potentially be shipped across state lines, and then all of a sudden now you have interstate commerce and it's no longer in the state's purview, it's back in the federal jurisdiction.
Right. So ensuring that it has to be a card put into the system, that the cardholder has to be able to put in their PIN, that is a check that makes you confident that this is a transaction happening face to face in the state where it's licensed and legal.
Yeah, so we not only do it from the point of purchase, but then there's all sorts of, you could call it underwriting that we have to do just to qualify the merchant, make sure they're a valid operator, make sure the place is licensed. We have certain KYC, AML, BSA checks that we have to do. And then that's just the beginning of it. You have the periodic reviews that are done, everything from as frequently as monthly to quarterly to annually. You have to do a SARS filing, and that means you have to track the transaction. I can say that every single PIN debit transaction we can account for. We know what was purchased, where it was purchased, how it was purchased, and that's being done by us in coordination with our sponsor bank. I can't say that about the cash sales.
Yeah, and speaking of cash sales, there are other platforms, other solutions that we commonly see in dispensaries, cashless ATMs, cash dispensing ATMs. But if you've been to your LinkedIn page, we know how you feel about cashless ATMs. But for those that have not been to your LinkedIn page, do you want to take a second and explain what that is and why you feel the way you do? And I'll just say, it's asterisk, I feel the same way he does, but I'll let him explain it.
So cannabis dispensaries MCC is 5912. We label it as such. If you're an ATM operator, it's 6011. Okay, that means cash dispensing ATMs. There's no such thing as a cashless ATM. I mean, there is. You've got operators out there, but basically, let me ask a question here, and I want to see if anyone can raise their hand. Have you found an ATM machine that's dispensing $57.63? Show of hands. I don't see any hands being raised. So what do? They round up to $60 because we all know that cash dispensing ATMs will dispense 3 $20 bills, right? So they ring it up and then they give the difference back to the cardholder, right? And that's they label it as an ATM. It's showing up as 6011. So they're miscoding, mislabeling, misidentifying the true intent of the transaction, where it's being done, and they're labeling it as if it's dispersing cash. Now the cardholder also pays an out-of-network fee.
Well, from the card network standpoint, from the processor, what does that transaction look like, even though it was a cannabis sale? From their perspective, what do they see?
They see a cash dispensing transaction, and I find it very ironic. Again, if I take a look at the likes of Visa, MasterCard, Discover, and then NICE, and so FIS and Pfizer, and I hate to throw them under the bus because I got friends that work in these firms. We have a tool. It's called LexisNexis. Okay. It's not a proprietary tool, and that can look up. We know an address, and we know based on county, city licenses what's located there. They can do the same thing. every single ATM machine could be identified by location. They just have to use the tools. And it's common tools out there. LexisNexis is just one of the systems.
So getting back to what we view as compliance solutions, you touched on this earlier. Once you have a cannabis dispensary in your system that's using your point of purchase solution, what goes into the monitoring, the oversight, the use of AI or automated tools, plus the human element and the sponsor-bank relationship to do this right, to unlock transactions in a compliant and lawful manner and keep them that way?
So on the front end, I mean, again, you're gonna do the necessary work, but let's just say we're gonna shift to the back end, which is the risk monitoring. So if you wanna get into the space, you need to have a tool that will do web scanning. Not that you want the merchant to be selling online, because God forbid you don't want that.
They cannot.
Yes, exactly. But they can put their menu online. And you can order online with a pickup at the dispensary, and that's where the transactions will be facilitated. You gotta make sure that they're selling products that are deemed compliant, within what's considered qualifiable sales based on the state for either recreational and or medicinal. You also gotta make sure they don't put any claims on there that are unsubstantiated or not been fully tested pursuant to, believe it or not, cannabis does follow the FDA rules. So it's funny because that's a federal agency, right? So they do have to adhere to those rules.
We do have to monitor for claims that might run afoul of the Food, Drug, and Cosmetics Act. The FDA still has oversight of that. So there's a lot that goes into it. But what I'm hearing you say is talking about some tools, but looking at the tension between the federal view of cannabis and state laws, how do you stay abreast? And have there been any developments recently where you've had to take action based on changing state laws, or the technology you used enabled you to do that and ensure that your program still stayed, I guess, as risk-free as you can make it?
Yeah, that's the other thing, is that because the state passes a law, does not necessarily mean it's a good law, right? We all know that from other aspects. Colorado passed the law, it's I think 44-10-501. Leave it to the legal scholars to come up with those numbers, okay? And it said that if you're a medicinal cardholder in the state of Colorado, the normal limits is 2 ounces. But if you have that and you qualify under that, you can purchase up to 1 pound of cannabis per day. I don't know 1 pound of anything someone can consume a day, right? But that's per day. So in the average month, it's 30 months. It's 2 to 30 days. It's 30 pounds of cannabis. We found 2 dispensaries that had that listed on their website. We discontinued that from our program. And then we had other analytics like average transaction, high transaction. Certainly those type of sales were not $58 sales or $300 sales. They were well into the $1,000 range, or not higher. So we can't even permit a dispensary in our portfolio to be doing that, even though it's a law in Colorado. Because where's that cannabis essentially going? It's not for the end user, that kind of purchase power. They're potentially selling it. If they're reselling it, then it could potentially be a black market transaction. Those are the things you need to consider if this is a space that you want to get in. And again, thankfully, some of the analytics that we have and some of the fintech tools, we're able to pick up and do those scans, see it, and then it triggers an event that our personnel, my risk team, will put human eyes on, look at the site, and question the merchant. And from there, we make a business decision.
And to me, that's a really interesting example, because what you're talking about is staying abreast of changes and developments in state laws where cannabis has been legalized. But in this case, the impact of that is that what they allowed the consumer to do was potentially trigger some of the federal enforcement priorities under the Coleman, which is kind of ironic, but also the tools that you have in place allowed you to catch that, put human eyes on it, and basically excise that risk from your portfolio. Right?
That is correct. So again, it's making sure that every single one of our dispensaries are operating. And that's what, if you're going to get into space, you have to account for. You have to account for don't forget the sale. You have to track the transaction. It's all about seek the sale and make sure that you're not doing something that's apparently wrong money. Because the gentleman that was here earlier, they actually talked about offsetting against potential fraud.
Yeah. So one aspect of, I view bank fintech relationships as part of fintech. Right? So talk a little bit about if you could, the sponsor bank relationship. In order to do this for the cannabis industry, what you have to look for in a sponsor bank, what needs to happen, and why it's so important?
Well, that's a great question. So you have 8,000 banks in the United States, right? We all know that. I mentioned in the beginning of this session, 500 are doing some sort of form of depository services for the dispensaries, meaning they're doing the OCC work, okay, and following FinCEN guidance for banking. Believe it or not, there is a FinCEN guidance, so banks can bank marijuana-related businesses. And I mean marijuana-related businesses because you can be a cultivator and you come in. You can also be a law firm that's focused in your marijuana-related, in that sense, you can be labeled. So, in any case, you have 500 banks. Doesn't mean that all 500 banks can do any kind of sponsorship card services, like be a sponsor bank for card clearing. The gene pool gets narrowed considerably, and I spent quite a bit of time, I'm saying about 5 years of research before we got in. We launched FP to make sure that we had identified the right sponsor bank and we had the right underwriting risk, but that the sponsor bank also understood how to do it, because it doesn't matter whether you're doing cannabis or you're doing general convenience stores. Every single merchant account needs to be underwritten, period, okay? And you not only need to underwrite it from a processor level, but your bank needs to also underwrite it. You don't want them to just be a rubber stamp for you. They're the second set of eyes, AI and human eyes, to make sure that we didn't skip something, we didn't overlook something. So you want a partner that's equally diligent, because you're only as strong as your weakest link. He tells me this all the time, being my legal advisor. So you want to make sure you have no weak links in your setup. So it's key that you have a sponsor bank that obviously inherently knows the space. We identified a bank that was in the marijuana space doing both depository and lending services.
It's been my pleasure to be the fly in the ointment for you these past few years, and you're no man. But from my perspective, I think choosing the right sponsor bank, having a sponsor bank that is deeply engaged, has the resources, and is fully committed, that their board of directors has approved the program, and that they treat it as a true partnership with the processor, is absolutely critical to doing this right. And if you have that kind of support, then, like Joe said, you have a second set of eyes on it, but you also have a bank that realizes ultimately we are responsible for this portfolio, and they view it that way, and view it as a partnership, and we're going to leverage all the tools we need, all the human assets we need to get this right. And I think you've got that in this program. Where do you see the cannabis industry needing change? And maybe it's not the cannabis industry itself, but as far as being able to eliminate the stigma that has been on the industry, and hopefully eliminate the reliance on cash or the forced use of cash because of lack of regulatory commitments. What needs to change, in your opinion?
Well, in order to get complete normalization, it'd be nice to say that something can come out of Capitol Hill, but it's hard to get anything out of Capitol Hill nowadays. So I don't see anything between the House and the Senate and the executive branch coming down the pipe anytime soon, certainly not before the next general election. We did see a development of the HSS, made a recommendation to the DEA to delist cannabis from the level 1 drug to basically 3 or 4, which would be back in this neighborhood of an aspirin. That would be a nice step forward. Short of that, the realization is that cannabis is somewhat normalized. Let's put it this way. 40 states have legalized it today. Another 2 or 3 have it on the books. So you have a supermajority of states. 65% of the American population is found in favor of cannabis. So there is a normalization there. It's a $31 billion industry last year in sales. So this is not being done out of the garage. So the question is have the states normalized it? It sure is. You got, again, 40 out of 50 states, and we could be 50 out of 50 before something happens on Capitol Hill. So, and then, like I said, you have 500 banks, and more banks are jumping into the fray. Yes, they're community banks or small regionals. They're not going to be your top 10 banks. They'll always be the last ones to join the party. The top 10 banks haven't even endorsed the Farm Bill yet, and that was passed back in January of 19.
And what about, well, I just know that certain card brands have taken a stance, a public stance against cannabis, but you also mentioned earlier that we do see debit networks and card brands on certain services that we find in cannabis dispensaries. What is your view of the card brand's role in this, and what you'd like to see happen there, or just historically how that's evolved?
Well, that's actually, that's an interesting, what we call it, Pandora's box. Because you got MasterCard who went out on, I mean, everyone saw it, it was all in the different news clips back about 2 months ago, saying that they don't want cannabis on their network, yet they've had cannabis on their network for over a decade. So if you're MasterCard or you're Visa or you're FIS or Pfizer or anybody else for that matter, if you're saying it's illegal and we want to follow by the federal rules, then you're going to refund all the interchange revenue that you've enjoyed on those ATM debit transactions and all the other PIN debit transactions you've done. And the different acquirers, the globals, the FISs are going to refund their authorization, settlement, and gateway fees. And the processors would have to refund, or basically not refund, turn it into the Drug Enforcement Agency. So you'd have to surrender the revenue you've earned, because if it's illegal, it's illegally gotten. So are you going to follow by the federal rules? If you are, then you need to surrender those funds. And we're talking hundreds of millions, if not billions of dollars that those companies have enjoyed and are still enjoying. So, and if they don't do that, then they can't turn around and arbitrarily say, well, you guys are doing something illegal, but we're going to keep this. That's discriminatory practice. And guys like this make a great income litigating those kind of cases, because he'll never say he's got 100% winnable. He'll say 90%. I'll say that's 100% when he says 90%. So it's having guys like this that can get those companies straight. So
We made a promise to each other when we started this a couple of years ago that we would never do anything that would let anyone else tell us that we misled them about either the merchant level or the transaction coding level. So everything had to be above board, and we wanted to build a program that was just very hard to criticize, other than if you have a moral or federal-based view of the product. I'm going to pull a Kanye here and go off script for a second. I want to ask you about, because for me, I feel like having the program in place, the biggest expense, the biggest cost is the ongoing monitoring, the making sure that your merchants are all playing by the right rules and that you're enforcing them. What, in your experience, has been the biggest challenges or the most important things you've had to address in that regard? And what tools are out there available for you, fintech arena or otherwise, to help you address those issues?
there are a number of providers. Number one, I didn't write any software. We license software. And the reason why, like I mentioned, LexisNexis being one, but you think the credit bureaus, okay, you know who those are, the different web scanning tools, G2 or those companies, okay? They're out there, they're part of the fintech arena, and they produce a very good, viable product, CRM solutions as well. So we're just using different fintech technologies that we've created an agreement with, and we obviously pay them a software as a service fee every month, but they help us, as you like to say, put a solid chain link together and kind of create the standard, a manual that, you know, we think there are a few others trying to emulate us today, and I do like that, because when you're in a front runner in an industry, and like my PayX company was in the debt repayment space, that was where John Moore's going, you're sometimes stepping into a field, you don't know where the different landmines are, and you have to tread very softly. You can't just decide, I'm going to storm this field like a football game. And so you have to be very careful what you do. You have to make sure you don't skip from A to C, skip over B. So you have to use the tools, you have to do the processes day in and day out. And we have conversations, we have help calls internal twice a week. I'm constantly talking to my colleagues, and I consider them colleagues. I might be an owner of the company, but they're my peers, and some of them are here in the audience today. And I appreciate them coming down here. So you need to have a good solid team that's doing everything and not letting something slip through. So when you're dealing with any kind of risk, and merchant acquiring itself is risk. A good friend of mine, Obi Rawls, I was chatting with him. He's been in the industry longer than I have. He might be sitting in the audience today. I don't want to embarrass him if he is, but in any case, in a nutshell, we talked about merchant acquiring being basically an unsecured line of credit, because it is. So, you know, if you're going to make an unsecured line of credit and you're a bank, right, that's pretty risky. So you've got to have the right checks and balances in place to make sure that if you want to perceive your merchant as a borrower, that they are creditworthy and they're doing the right processes and procedures and they're selling the right product and they're doing it as described as you underwrite them. And then you got to do the necessary periodic reviews. Banks like to say you got a loan, you got to get I want to see your financials every year or every quarter, right? Just to make sure there's nothing to change in your credit standing or financial standing. So.
I'll follow what happened before and see. I see a lot of heads nodding along. Does anyone have any questions? Yeah, I think. Yeah, one up right here.
How does underwriting differentiate for your cannabis businesses from a standard merchant that, and let's say it's 5-9 here in the country, if it's not selling CBD-based products, how does that differentiate in the underwriting?
Okay, so just the question was, how does the underwriting process differ for a cannabis merchant versus somebody who may be in a lower risk, like a CBD or a vape shop that doesn't sell cannabis? But, did I get that right?
Yeah, you got that right. So that's a great question. We actually do. We're very strategic. We focus on cannabis and CBD space too. CBD we do permit credit and offline debit, and they can sell online. But you do the same periodic and underwriting. You make sure that none of their products, number one, falls afoul of the FDA. Number two, THC does not exceed 0.30%, which is the federal legal limit. And then even if you approve them on that, you're doing periodic reviews to make sure they're not selling any cannabis, anything that's north of 0.30% THC. So, but you can permit credit and offline debit for those. But the risk is higher too, because now if you opened up, and that's another thing, is you allow for credit and debit, what do? You allow for chargebacks. The cardholder has 180 days to dispute. PIN debit is much more difficult to dispute because you put your PIN number. So the risk element is higher. Yes, you are. Absolutely. And you're using tools to make sure you're mitigating the risk, and you're taking a look at chargeback ratios and returns to make sure the merchant's conforming. Especially, I haven't built anything. There's a lot of good tools right off the shelf, and it's, I'm a big fan of partnering up with firms that know how to do it better than I do. So,
any others?
there's a question about it.
Yeah. Do you see a futures or commodities market forming for cannabis before regulation or federal regulation establishes it as legal? Do you think that maybe a state can start issuing potential future or insurance on cannabis use at some point?
I don't necessarily see it before. It's interesting. I see a lot of movement towards when it normalizes, because you take a look at the beverage makers, especially the alcohol beverage market makers, and RGR Nabisco has even gone on record about transforming some of their fields from tobacco to cannabis. But that's when they feel like they've got the ability to be interstate. So, yeah.
So, as far as transacting in a compliant and lawful manner, I know that the attributes of your program, transparent is there, it's properly coded. At the transaction level, you can see the source, the merchant descriptor is correct. No one's going to be able to say in your system, you masked the fact that this is cannabis. You obfuscated information to allow us to know this cannabis. Are there other solutions besides point of purchase PIN debit in the industry that can provide that same level of transparency to the cannabis industry?
The only other ones I've seen out there are some of the wallets that you fund via ACH, and then they create a store value card. They can be redeemed at participating merchants. So it's like a closed open loop gift card program, but it's like sometimes you see that at the malls, right? You can go to the mall, general store, and load up a card, and you can redeem it anywhere in that store that's in that mall that participates. So in this case, I've seen some that say we've got participating cannabis stores that are associated with this card, and so that means the consumer will be able to go in and use that card. It's a store value card.
And that falls into the category of compliant, because you can code those correctly, and the transaction will appear as the transaction should appear, which is a purchase from that.
Well, again, they are, the provider that, the system provider has done the necessary background check on the participating cannabis operators to make sure they're all licensed. So if they're, as long as they're doing that work, and I've seen them, some of them do that, then it's a matter of making sure that their cards are being utilized properly in the stores that are participating.
Okay, I'm being told we have a minute left. Last chance for questions.
Do you have any tax discount or full price when you get
No.
And then that still first place I
Yeah, I'd say it's as long as they're doing the necessary background on the vetting, then those are the only other ones I can think of. Again, we're at point of purchase pandemic, that's what we say.
That would be consumable. If you're gonna see people pass those cards.
But you need to be of the age of majority to purchase, so there's still the ID at the point of sale regardless. So, any last minute questions before we're yanked off the stage?
We'll reserve our last 30 seconds. Thank you.
Thank you very much.
All right, so who's signing up for Cannabis Cup in Denver? Now, I will tell you, when I went, again, it wasn't what I expected, because this is kind of what happens. You have, innovation conversations. You have folks who are looking for jobs. So it almost was a conference where if you wanted a job in the industry. So hopefully this also was, something you weren't expecting. So our next two panelists, if you want to make your way up, we'll be talking about the power of real digital identity and putting digital trust at the core of every customer interaction. And while they're coming up, I'll have to ask, some folks have traveled all the way from the West Coast to Atlanta to be here for this conference. Has anybody else traveled from the West Coast or maybe further? I know there was someone from LA, Dallas, yeah, San Diego. All right, well, we have one of our panelists who came all the way from London. So let's go ahead and give them a few minutes to it.
Yes, we got it. You need to get out. You're sucked, right? Okay, I was gonna say we've met before. I saw your name earlier. I was like,
Part of this discussion
I didn't realize we introduced the last name sharing.
Financial services industry, so banks and credit unions, relationships and things like that. So one of the things we're going to be talking about, and actually if you want to go ahead and introduce yourself.
Hi everyone, I am Yuelin. I'm the Chief Product Officer at Onfido. We are an identity verification software company.
Great. You're doing great.
Operating in 7 countries along including the US.
So and that's fascinating to me because again, they've got a global footprint. We're talking about identity theft and fraud. And I would tell you that in the financial industry, traditionally it's somebody walking through the front door with their driver's license, a teller or a new account person, just looking at that information to identify the customer. So there's such a huge financial loss in the financial services industry to identity theft and fraud and things like that. And the shift here, now that we're talking about fintechs and new technologies, we're talking about bad actors being able to find those loopholes, right, in the new environments. So that's where we start talking about synthetic fraud and biometric fraud and things like that. So my first question to you would be, from a systems or a process standpoint, how do you look at things like synthetic fraud and biometric fraud, and how does your platform try to address those concerns? And do you utilize AI as part of that process? I was kind of curious about that as well.
So it's a great place to start. So when I think about fraudsters, clearly fraudsters are, especially now, incredibly organized, incredibly professional, very much driven by ROI. In fact, when you look at some of the data we have on our platform, it's a 24/7 business. It's truly global. It's in some ways quite an impressive business. And the trends evolve considerably based on what is the thing that gets them the highest ROI at that point in time. And in the last few years, there's definitely been a rise in synthetic identity. So this is a combination of something that is very real, such as an SSN number with all these other attributes, which then sort of create this person that doesn't actually exist, but very much looks like they exist. And it's very powerful because then you can take that, build a profile around them, and the way that our data systems work, and then they get picked up, and then this becomes a very valuable identity of someone who doesn't exist, who you can then use to do whatever you want to do. And so when we think about identity verification, there's a couple of different components in there. One is you sort of have to tackle that at the beginning, because once a synthetic identity is actually created, and then you realize that they have an account over here and something over there, which is how a lot of identity verification works, especially in this country, right? So once you actually have, say, a profile with some of the big financial institutions, and then a profile has at the credit reference agencies, by that point you're not a synthetic identity. You're very hard to detect. Whereas what we say is at the beginning, you need to solidly understand that this person is who they say they are, and what you have there is what they know, which is some of the stuff that's already been used, the knowledge-based stuff, what they are, and only they are, and that's where biometrics come in, and then what they have. And the most universal thing that people have still to this day is some form of document, even though I appreciate that increasingly this will become some digital form of a document or driving license. And it's the combination of these things done early enough in the process that you can then use to be able to tell this fraud. Otherwise, you get into the system. The second part is fraudsters really care about scale. I think what the professionalization of it means that most of the fraud you're seeing isn't just one person creating one fake account. In fact, when we look through our data with our clients, we're talking gangs, groups of people creating lots and lots of different accounts. But to create this, there's an investment. And so the easiest way to do it is to take something and make a change, and something and make a change. To create entirely different, like new identities all the time, it's actually quite a lot of investment. And so you can also start then detecting it using other attributes. So has this social security number or document number or something else been associated with other attributes I'm collecting? Have I seen this face before? Have I seen this face linked with this data before within my system? Or is this IP address or device being used multiple times and have these other suspicious attributes together? So I think from our point of view, the only way to truly detect, or even again, to the best level that you can, is through a layered approach using multiple attributes that isn't just linked to one thing, which is what you know.
So like you mentioned, like photos, and actually there was a discussion earlier that gave that example where the biometric piece where somebody's replacing a photo on a document, or photoshopping a copy of a photo on a document, stuff like that. Does your platform use AI to try to identify those types of methods of fraud?
So that's what we are 11 years old now, and we've been using AI on our platform for I think probably about 8 of those years. So AI is really great at detecting details that are humans actually find really difficult, especially when you're talking about something like documents, which have so much variety and thousands of different versions. It's actually kind of impossible for a human under time pressure to really analyze a document, work out if it's been photoshopped, work out the edges make sense, the texture makes sense, and so on. So machines are really good at this. They're really good at doing this, especially on digital images. They're really good at doing this on scale, and they can also learn as well. And so computer vision and AI is a really core part of our product, and how one of the ways that we look at fraud detection, both on documents and biometrics, and other products that we use.
Well, and I find that interesting because, again, working primarily with financial institutions stuff, a lot of times that person is bringing in that identifying information. The person that's looking at it is a new account person or teller that hasn't been doing it that long, right? So the idea of a platform is designed specifically to do that. I mean, that totally makes sense. As far as as far as an automated process compared to the traditional manual process, you've talked about looking at kind of taking that layered approach and things like that. How do you feel that the automated process is the most beneficial compared to just the traditional manual process? I mean, I know it's kind of a broad question.
So yeah, this is somewhere where technology does make a huge difference for a couple of different reasons. So one is just purely on accuracy, because you can train the computer to understand templates, understand the digital tampering, understand all of these different fraud methods, which humans really do struggle with. I think your earlier example is really interesting. Even border control are actually only accurate, only just the majority of the time. So never mind someone who, or Mark or Mbanq someone. And the second thing that's really important is about scalability, because this stuff is quite, it's again for humans, like to really think about this, analyzing stuff is very onerous and very tiring. Versus computers, the nice thing about them is they don't get tired. You just have to get more processors. And as you scale into millions and millions of transactions on a daily basis, it's kind of impractical to actually do this entirely manually. I think the third bit is that it learns. So we retrain our models often based on new tech vectors, new research that we've done, collaborations with our clients on potential like fraud things that happen, and this is done super regularly. We're talking literally on a weekly basis. You cannot train humans on that on a weekly basis, because if you're like, here's the 5 new attack vectors this week, and then here's another new 5 next week, they're only forgotten the 5 from last week, and then you do another one and another one and another one. Whereas this is the kind of stuff machines are actually really good at. Of course, there are some, like, you need to have the data. So it's not that you can just start this absolutely from scratch. And there is value in having some humans in the process, especially on like specialists where they're like labeling data, or if you have missed frauds, like the machine isn't quite at the stage where it can do it entirely its own analysis, right? Even in the world of AI, you've still got a lot of engineers and research scientists programming the AI. But in terms of day-to-day running, the technology always wins.
So, and my next question is more personal, because I was just at a small community bank yesterday and today, and they brought up the fact that they had an instance of synthetic fraud, where a customer came in and was using an actual social security number of another individual, and the social security number was for a child. So we actually talked quite a bit about that. So my question to you is, one of the things that I noticed in some support documentation was talking about repeat numbers. So my understanding is that it's actively looking for numbers that have been used in the past. Where is it looking for that? Is it looking just within the data that you've already collected historically, or is it reaching out to other systems to check that kind of stuff?
Yeah, that's right. So actually, synthetic IDs using children's SSN is a classic route, actually, one of the most common forms of synthetic identities. And so when we think of repeat attacks, which is the thing that we think our clients are most vulnerable to, that's the really organized, sophisticated stuff rather than just someone doing something casually. We take the data that we collect for that client. So rather than having a big pool across clients, it's for this client. You've seen these attributes or this combination of these attributes, and it could be this SSN, it could be the document number, the name, date of birth, or anything else. And actually, once you start seeing this, you can then play this back into what the fraudster is actually doing. So often we might actually, this will flag it 300 times.
Right.
And then you can go back through, and we have got team fraud specialists, and they'll be like, okay, so this person took this template of like Maryland driving license, and they had this number, and then they Photoshop this, and they Photoshop that. Because you don't, as I said before, it's actually a lot of effort to entirely create a new one. Right. Especially since there's like data validation codes, and so on, or you have to create so many barcodes that then actually work. And so it's easier just to like take a template of something and then just change a bit. And you can actually start seeing this journey, like as you look across all of these different fraudulent ones. It's very interesting. And the reason we do this within clients is a couple of reasons. So firstly is that is how currently at least the MO of a lot of fraudsters are. So they'll create hundreds or even thousands using some identity details they've got with one client, and then they'll work out the weaknesses, and this may or may not work, and then they'll take it to another one, and then they'll take hundreds of thousands with another one. It's actually less of I'm going to do one account here, and one account here, because that doesn't scale. Like if you're going to have to go across all of the financial institutions, it's not actually enough for you. What you really want is to find that weak spot one particular institution where you can then go, right, I can get 500 in, and now I can do these accounts. And so we found that even just having it within one client, within a time period, you actually catch a huge amount of fraud.
Yeah.
And the second one is about much more to do with like privacy considerations. So we're a global company. We operate in Europe, US, Asia, Americas, and so on. And privacy is such an evolving landscape. And what kind of like, data pooling or profiling you can do in one geography in one day could easily become the next California Privacy Act the next day. And so we took the decision to sort of follow the principles of GDPR, which is the European Data Protection Act, which has actually really well thought out principles. But one of them is about the user themselves, right? And they have the right to know what data that they have. And the California Act is actually very much based on the principles of GDPR. And so once you start doing, like at this point where you're telling one client, hey, you've seen all of these attributes before, then they can go and investigate it. And if it turns out it's just random or that's just happened, they can then make a decision about it. But once you start pulling this across clients, this actually gets into very gnarly privacy territory. Now, you're
Sharing data.
yeah, you're sharing data, and it's also you're sharing attributes of data.
Yeah.
And if someone decides to got a photo of me on the internet and then combined it, made this new synthetic identity, and suddenly my biometric was on the system. If you then start sharing this across absolutely everyone, then every time I use my face to apply for a new fintech product, then will I get flagged?
Right.
And then what happens after that?
Yeah.
So there's some really, so we decided to take, in some ways, probably a more conservative stance, but also a more future-proof stance, which is that the world is the wind privacy regulation is going in that direction. In certain states, it will go faster. In certain states, it will go slower. And Europe has already gone, and Japan, you name it, lots of different countries. And we want to build something that's really future-proof, so that we're not backtracking on the technology. And this was a great way of doing it. That said, you can still take learnings across clients by retraining the models.
Right.
Because you're seeing these different types of attack vectors and so on. But it's not the same as like keeping attributes of an individual that way.
Absolutely. Makes total sense. So my next question is, and I'm asking this one because my degree is in economics, so I'm a total statistics nerd. And I look at a lot of different fraud reports, annual fraud reports about trends and information and things like that. And they put out I got a copy of the one that you all just put out. Would you mind just maybe highlighting some of the things that came out in your recent fraud report that you find interesting as far as maybe future movement or things like that?
Okay, so we do an annual fraud report. So if anyone would like to see it, you can get it from onfido.com or you can contact me and I'll happily send it over. And it aggregates all of the data we see across all of our 1,000 plus clients. And some of the stuff has been fascinating. So, for example, COVID. What was the impact of COVID on online fraud? So probably not a surprise that it went up for everyone because a lot of the channels, fraud still needs to exist because the drivers of needing to launder money or so on exist. And that all went online because you couldn't do it in offline cases anymore. So we definitely saw a considerable jump up, and that's in the data. And then it peaked actually 2 years ago, and then it's slowly coming down again because as things open, it isn't that we universally reached this higher level, it was just that that's what people needed to do, and then we're slowly kind of normalizing. But the one place we saw a huge increase in fraud that year was in retail fraud. And it just became much more about people wanting to buy stuff. So retail fraud went from 20% of the fraud we saw to 40% almost, which is huge given that we work with so many financial institutions and transportation stuff. And then actually then the next year came back down again. So as soon as the shops opened again, different forms of retail fraud and so on, they was no longer reliant on the same channel. So that was a very interesting one. The second one is, what types of devices are most likely to relate to fraud? And almost none of them are the ones you think they are. It's not Apple, it's not Samsung, it's not the big brands, because people want to use burner phones. Right. And you don't want to make the iPhone 14 Pro your burner phone. That's really expensive. And so you're using these brands that personally I've never even heard of. I didn't even know these were brands that were easy to acquire in the shops. But that's the phone of choice to be able to do some of these things, which was also really interesting. And then I think the last bit is that actually the move to online fraud, although the move from offline to online went very quickly. The actual types of documents they were doing, so what the shift from, say, physical counterparts forgeries to digital ones is happening, but much slower. So people still are sort of playing around, trying to print, like, so on, making physical forgeries or counterparts, or maybe probably ordering them off the internet somewhere.
Yeah.
And then trying to use that to get through versus going straight onto, using Midjourney or whatever equivalent, or Photoshop. Well, Photoshop is easier to detect. That's probably part of the issue, right? Because
Right.
a lot of the pixel analysis that you can do now is so sophisticated.
Yeah.
And so that is happening. It's gone from like 85% physical to down to about 72%, but it's still much lower than the speed that fraud itself has moved online.
Well, it's interesting you mentioned COVID, because I know that one of the things that I see a lot in the financial industry is whenever there's any kind of major event, like a disaster in a certain area, like hurricanes and things like that, we tend to see a fraud increase within those spaces and within those systems, and not just, and even benefit fraud, setting up fake accounts to collect contributions that are supposedly going to victims and things like that. We see a lot of that stuff happening too, so it makes total sense that you see that shift during the pandemic and things like those things. We talked a little bit about the onboarding of new customers, the processes and things like that. Do you find that the automated process that customers are going through produces any pain points for customers, and whether that makes them more or less comfortable with the process, or where do you see concerns or leverage pieces within that customer onboarding process?
And so it's a really interesting question, especially as a global company,
Yeah.
Because I think attitudes towards things like biometrics or even documents or ID cards, right? These are words that in some places get people being like, ooh, and in some places are like, yeah, I do this every day 10 times. I don't see the thing with it. And so what we actually call is like balancing the right amount of friction, or like friendly friction. So in some geographies, this could actually just mean that everyone shows their ID card for everything, because they literally show their ID card for everything, no matter what they're doing. So this is just how it is. And in some other places, it's actually making sure that you're really managing your risk. So maybe at the beginning, you don't need all of this data, you don't need to collect their biometrics, but if they want to do something more higher risk, then you're balancing that at the right place, or you're really explaining to the user, like, hey, we're using this to your account to prevent fraud. And in the future, for example, if you want to change your primary bank account, we will ask you again for these details. And you have some of this stuff really up front and making it really clear to the user what you're using it for. And we're not going to be sharing this with anyone else. This is it. This is linked to your account. That kind of stuff really helps. But I also think, especially in search and geos, how you access services and the friction that comes with that also really influences how you look at those services. So I think especially as someone coming from the UK to here, so the UK has really great digital banks, amazing customer experiences. It's probably the home of challenger banks in the Western world. But yet still, I would be really surprised if I could get a loan without having to fill in some, like, quite a bit of information or going through some form of identity verification. If you just took my name, my date of birth, and my tax number and just gave me a big loan, I would be quite shocked, actually. Versus in some other countries, the US is particularly special, where actually we know there are like people here have so much more credit cards, right, than in other places. And in fact, there's actually lots of countries where the credit reference agencies basically have no coverage because they're just not a place where people are used to third-party data brokers and also having so much access to credit. In which case, you expect the bank to ask you for documents. You're expecting them to ask you for your biometrics. You're expecting them to ask for more things or a history. And so I think the nice thing about it is just that this varies so much, use case by use case, client by client, and that's kind of the fun of it, right? It's a complex thing. It's not a one-size-fits-all thing.
As far as footprint goes, because one of the things that within the fintech space that I've noticed is, depending on the global footprint, you've got more emerging markets. I went to the Latinx fintech conference not too long ago, and a lot of the platforms there were really focused on alternative models for credit histories and things like that. Do you all spend a lot of time trying to look specifically at those global markets where fraud might be a lot higher, especially in emerging markets and things like that?
And so I think we have, I would put our clients into two categories.
Mm-hmm.
So one category is probably the one you expect, right? Like digital transformers is what I call them. Large, big enterprises who are trying to digitize their systems, trying to compete with, I guess, the newer players in the market, create much better user experiences, have their own apps and online in some way. And then on the other side is all of these people, I call them actually like digital first. And most of them actually have business models that in some way challenge or complement this side because they're trying to offer loans to people who don't have access to credit, or remittances, people who are often new to the country, or new to a place and don't have that footprint to be able to get traditional financial infrastructure, or people who want to, make better use of assets, share cars, like, getting car with strangers and so on. And so it's very interesting because in this group, they are targeting where this group is weak because that's where the opportunities are. As they get bigger, of course, and as markets get more established, then they start to look they're never fully similar, but they're like start to look a bit more similar in the people they target. But at the beginning, I think a lot of the people in the digital first group are finding their market that are the underserved people who are the early adopters.
Yeah.
And so we serve both.
Absolutely. It's interesting. Well, and I just want to make a personal comment too, because you mentioned like gangs and things like that. So I remember 15, 20 years ago, and I'm older than I look, I remember driving back home on a Friday and listening to an investigative report where literal gangs in Chicago were getting more active in mortgage loan fraud than drug activity and things like that because it was less expensive and more profitable. So, and that was 15, 20 years ago, and that was before all of this. Is there anything else you kind of want to throw in at the end, and then we can make the wrap up questions or anything like that?
I think, as I said before, it's a very lucrative industry, yes. And I think once you start thinking of it like that, and they're rational actors, they're operating to different roles, but they are rational actors. They will use the best technology that they have available. So are you going to fight them with no technology or like the rules from 10 years ago, or are you going to be like, okay, actually you can like make deep fakes in this way, so we will try and like be able to detect in this way. You're going to do injection attacks in this way, so we will do this way, right? You're going to Photoshop in that way, so we'll work it out. The tools that I think fraudsters have nowadays are incredible because they are the same tools that we all have that have transformed our world. And I think that's biggest lesson from all of this is that we're not going back, we're only going forward. And in some ways, it's a fascinating place to be.
Well, it's always a moving target because the bad actors are always looking for the loopholes. They're always looking for, and as things change and we have new models or new processes and things like that, they're going to be actively looking for those weak points that they can take advantage of. Does anybody have any questions about anything we've talked about? Yes.
Yeah, I have a question. You mentioned these different geos. I'm curious what your customers want, speed or accuracy? What do they care more about, or both?
Speed or accuracy? Well, everyone wants everything better, cheaper, faster, all the time. I think probably comes from their expectations. So it will depend a lot. Like if it's a bank, they definitely need accuracy because they know that they will have to report back to the regulator at some point. And speed is important because they're trying to create this journey. But in all honesty, most of the digital journeys are such a step above the journeys that they already have that if it takes 30 seconds more compared with having to go into a branch or telephone someone, this still seems beautiful in comparison. So there are different trade-offs people can make. Versus some, there are probably sectors that do care more about speed, and that those are ones because we serve all industries, right? If they like, for example, if they've set it up in such a way, like, you know, you get access to a gaming account, and actually, you're not putting any money in, you're just signing up. So I'm just like really trying to get you down the funnel. And so for me right now, it's about speed. However, once you actually put $500 in and you're trying to do something, then I actually care more about accuracy, and I will layer in that way. So, but they all want it cheaper, faster, better, because that's life.
Well, and I think like when you talk about it from a global aspect, like in the U.S., you know, people in the U.S. were so used to not having to have their photo taken or things like that. So you know, in the banking industry, when we start asking for more information, there's going to be pushback. You know, I'm not thinking about, you know, more the manual process, but even the online process, I can see that as well. Whereas in more emerging markets, you know, they just want to get into the marketplace, so they might be willing to, you know, more willing to provide more information without complaints and things like that too.
Totally, you can see this in, like, for example, in Brazil, right? Like Mbanq, which went from like 0 to like 40 million customers, which is like the fastest growing bank in the world. It's because these people who were using them had never had access to credit before or a digital bank. And so if you had got them to jump through 20 minutes of hoops, not that they did, because they have a great experience, they still would have.
Yeah,
because
there
the
just happen to
equivalent
be
was
banks.
gonna queue in that bank and get rejected after like 2 hours of queuing.
Right, absolutely. Any other questions? Yes.
Real quick, how do you feel about digital distributed ledger technology? And is it something that's complementary to this digital identity effort, or do you see it more as a necessity to really speed up online transactions in a more secure way?
So, well, actually, I think great question. So we actually made an acquisition at the end of last year of a decentralized, user-owned, user-controlled identity called Airside, which is currently works with American and Alaska and other airlines. And this is our version rather than distributed. But we actually believe the future of identity is in that direction. It kind of balances, right, user experience and privacy and robustness. Either today and also when electronic IDs or mobile driving licenses come along. But we were also aware and pragmatic as a business that there are some people who want to use that today, and the vision of that is wonderful. But there's also just like, if you went right now to like the top 10 banks in America and tried to pitch them this, they would be like, maybe, whereas, you know, some of the other stuff. So it is a journey. I'd like to think that actually that is what the future will look like. But I think we've got quite a few years to get there.
If there are any other questions, I think we'll wrap it up. Thank you so much for being here.
Thanks for having us.
All right. And thank you for coming all the way from London. So that's pretty impressive here. So our next session, this is our final session, and then afterwards we're going to have an awesome industry night, which is going to be networking, drinks, more networking. So our next and final session is on how identity verification and fintech are powering the Atlanta-based fastest growing sports in America. So, by way of hands, any sports fans in here? All right, are we going baseball or football? Baseball, football, both? Yes, I love it. So, I'll go ahead and we'll have, Amy and Jay.
Well, hi, everybody. Please do not hold it against us that we're standing between you and the drinks this evening. We'll try to make it short, sweet, and super interesting, so that we can all go have cocktails afterwards. I'll go ahead and start and introduce myself. My name is Amy Barbieri. I'm the founder and president of Vital4. Vital4 is a local woman-owned technology company here in Atlanta. So I'm in my hometown, which is nice. My short elevator pitch is we fight financial crime with AI-driven data. So financial services industry, fintechs use us for their PEPs and sanctions screening and basically to help with their regulatory compliance needs and prevent fraud and things like that. So I'll turn it over to you to introduce
Great to meet everyone. My name is Deuskar. I'm co-founder and CTO of PrizePicks. We are the largest daily fantasy sports platform in North America, and I think just like you mentioned, we've been named the fastest growing sports company on the Inc. 5000 2 years in a row now, and Atlanta natives and founders as well. So it's a big pride point for us to bring a big B2C kind of success to the city. So excited to be here, excited to talk.
Yeah, congratulations on your success. When I was told I'd be interviewing or moderating this session, I did a little digging. And, I don't know if you want to brag on yourself or not, but I learned that you guys were almost 4,000% growth over last year. So congrats on that. As a co-founder of a company, we know that's not an easy task. So I think I'd like to open this up by hearing a little bit about, the industry that you're in, because I am not personally very familiar with the sports betting, online gaming world. So if you could just kind of tell us about the industry a little bit, and then we'll get into backstory of PrizePicks.
Yeah, definitely. I think it's definitely been an industry, I think largely commercial gaming in general, that's been in the spotlight and in the news cycles, for the last 6 or 7 years since the state of New Jersey took up the passport repeal case in 2018 and basically repealed the legislation that said the states can decide on a state-by-state basis if they wanted to implement regulated online sports betting. So obviously over the last 6 years, we've seen kind of this spread or kind of wave of specific states turn on online regulated sports betting. New York, Florida at one point, Illinois, et cetera, et cetera. There's been a handful of states now. I think roughly 15 to 20 states have some form of regulated sports betting that's been turned online. But I think the main reason people are so enamored with the industry is just the numbers that it's doing. Commercial gaming is, I think, on track to do $60 billion in revenue this year. About 3/4 of that is retail. The other 25% is online, which is where we operate. And then even within commercial gaming, there's a lot of different delineations, right? There's iCasino, online regulated sports betting, as I mentioned, and then there's daily fantasy and skill games, which is where we operate as PrizePicks. Probably a little bit less known about the nuances from a consumer standpoint, but our digital footprint is a lot larger than some of our contemporaries in the other industries. And so, excited to be kind of at the forefront of, this hyper growth and an industry that's growing, 10% year over year right now. So all eyes are definitely on kind of sports betting, iCasino, and fantasy and skill gaming, as I mentioned.
Yeah, so fantasy is kind of that niche, right, that you guys are in. So tell us a little bit, I'd like to hear a little bit more, too, about what you're seeing as far as competitors in that space as well. But before we do that, if you could just kind of tell a little bit about yourself. I do know that you have founded a previous fintech company, correct, and had a successful exit. So that's always a great start to a career. Tell us a little bit about your backstory and then how PrizePicks got started.
Yeah, for sure. So Atlanta native, like I mentioned, I've grown up here and lived here my whole life and was in Georgia Tech, so right at home, right here in Atlanta. But like Amy was mentioning, I think my last stint was as a co-founder of a consumer startup called Cabio in the consumer finance space, and so that's kind of where I got my chops, in our first stint, and especially had a lot of exposure to the fintech industry and conferences like these. So what we basically built was, a research platform for retail investors to really understand the investments in their portfolio. This was right around when Robinhood was kind of getting off the ground. So we had very similar missions to them to try to build something that appeals to millennials and Gen Z, as we saw that was the next kind of demographic coming up in the consumer finance space. And so we raised some money, grew that with a very limited marketing budget, and got very creative on how to build kind of a B2C brand with very limited resources, which I think is largely translated to a lot of the stuff that we've done at PrizePicks, and ultimately that ended in a nice exit for us. We ended up selling that asset, that company, to our largest competitor in the space, a company called Simply Wall Street, and they've grown since, still operational today. It's a pretty big platform, so we're pretty proud of what we did there, and obviously the exposure that we got to fintech. At the tail end of that experience, I kind of got re-engaged with my current co-founder, Adam Wexler, who's another successful serial entrepreneur in Atlanta. He had been in the fantasy industry for a few years at that point, and had been kind of following, this PASPA case that I mentioned that repealed the legislation in Jersey in 2018. And credit to him and his vision, I think he saw the writing on the wall that there was a lot of investor money about to flood into the online gaming space. There was going to be this kind of proliferation of sports betting across the country, and our mission and vision was very simple. We decided, okay, we want to build the most simple, casual, easy version of a daily fantasy game, and daily fantasy because it allows us to be operational in much more of the country. It's regulated differently than sports betting. It's more lightly regulated. It's easier to get into. And fantasy is a skill-based game, so the game mechanics are very different than what you may see on online sports betting. But again, going back to our mission was very simple at the time. It was let's build the most casual, simple, compliant game that fits kind of the federal definitions of a fantasy game, and try to build something that appeals to the casual sports fan. And so it was a very humble kind of beginning where my background is technical and computer science and finance, and so got started on building that. Immediately we saw inklings of some kind of product market fit there, and fast forward to now, we're over 350 employees. We're the number one largest daily fantasy operator. We've jumped the likes of DraftKings and FanDuel, and so it's been a very interesting ride, and obviously not straight up into the right one with things like COVID and the sports seasons getting shut down. But that's how I kind of got off the ground at the beginning.
Okay, sounds good. Well, forgive my naive. If this is kind of a silly question, but you said football or baseball in the beginning, right? All sports? What kind of sports are on your platform?
Yeah, no, great question. It's definitely catered and kind of starts, with football. I think that's we're all kind of caught up in the rush that is football season starting this weekend. But we do offer everything. We honestly see ourselves as the innovator in the space, like with the largest breadth and depth of player predictions. Our entire platform is around predicting player performance. So
lots of data involved with that.
Tons of data. Yep, 100%. And I think contrary to popular belief, actually NBA is our number one revenue driver just because of how much volume there is. And it's a great format for our game, but NFL is definitely number two and what people would like to pick on and sit down and watch.
Are you allowed to tell us who your favorite team is?
My favorite team. It's a good question. It's. I would
You
love
don't
to say.
have- you don't have to.
Let's just say I'm excited for the Falcons this year.
Oh, good.
Anyway,
Okay.
excellent.
All right. Okay, well, good. Well, so, this is Fintech South, right? This is a Fintech focused conference. And, when I think of a Fintech company, I think of a neobank. I think of a digital payment provider. Some sort of online banking solution. So, talk to me a little bit about how fintech, plays a role in powering your platform, and what makes PrizePicks a fintech company.
Yeah, for sure. We view ourselves as a fintech shop. Honestly, a bank of sorts, right? To your point, like we're dealing with people's money. They're depositing money into their wallets. They're trusting us to take care of that money. They're transacting on our platform when they're entering contests. They expect to be paid out if they win, right? And in our case, we're offering payouts on your entries anywhere from 3x all the way up to 25, 50x, 100x. And so, people can win big money on our platform. And so as you can imagine,
Not just big money.
We've had people win as much as $12,000, $15,000, $25,000 in one entry that they place on our platform, and so
maybe I'm in the wrong business.
I say we send ourselves to ourselves a lot too. Sometimes the members are they're getting their nice wins on the other side, but with all of that and the payouts that we offer and the experience that we're trying to provide more than anything, we're obviously in a very regulated space where we need to be performing KYC and identity verification on the people that come onto the platform, make sure they're of age, they are who they say they are, they're located where they say they are, and then they go to transact and make sure that the experience of depositing is as frictionless as possible, while, as you know, Andy, considering all the AML considerations, we've had a front row seat, I should say, to the constant push and pull between marketing and fraud, right? Trying to make the funnel as easy as possible to onboard a new customer and how you expose yourself on the fraud side. And I think we've learned so much over the last 6 or 7 years, built our own technology in-house to get more sophisticated, because I think a big factor in our success and the reason we've been able to outmarket and outgrow a lot of our contemporaries is because we focus so much on making the process as frictionless as possible. We're a bunch of millennials and Gen Zs that are trying to build a product for ourselves, and if it takes more than 30 seconds, we're deleting that.
Short attention spans, yeah.
For sure. And so I was literally at the US Open with our VP of Payments and Fraud, Mike, this last weekend. You would expect a lot of these incumbents and legacy operators to have this stuff figured out, and he couldn't make a deposit for the life of him on one of the top 3, top 5 sportsbooks. And so the gaming industry does not have this figured out, and that's why we feel like we're really pushing the envelope here. Again, we're all trying to remain compliant, make sure we're satisfying all of our compliance requirements and policies and procedures, but trying to reimagine and rethink this process for signing up, depositing, watching the game, winning big money, and getting paid out right away. So in that regard, I think a lot of the innovation when it comes to payments, when it comes to identity verification, fraud, a lot of it has to come from gaming because we've got such a big target on our back, and the operators and some of the, I should say merchants that are trying to push the envelope and all of this stuff as much as possible.
Yeah, understood. When you say you've learned some lessons along the way, can you share any of those with us? I mean,
Yeah. It's a great question. I mean, over the years, I think as we've explored vendors, obviously we don't do all of this stuff in-house, and we partner with a lot of great capable companies for things like identity verification, document verification. One thing that we've learned is it's very difficult to succeed in gaming if you're using vendors and operators that are only good at one thing. And that's what we dealt with a few years ago. Our KYC providers were pretty good at what they did in terms of verifying identity, but that's all they did, right? They only verified somebody's identity in a passive manner. So when it came to the people that they couldn't verify, we had to do some kind of document verification, additional verification on those people. We were forced to in-house a solution, which was extremely frictionful for our customers. As you can imagine, we're building a full-time team internally of people that are just reviewing driver's licenses. Like, it was a nightmare. We were doing stuff that's not.
and that's not your business, right?
Exactly. And so, we did the research, we vetted a number of operators, and ultimately came across a company called Socure, who's been one of our more successful partners to date, who, I think has proven like they view themselves as a more of a data company, and because of that, they're able to kind of expand their core offering from identity verification to document verification, but anonymize a lot of their data and then offer that back to the operators for additional fraud protection at the top of the funnel, right? And so we've become a lot more sophisticated in our operations where we don't just, when we think about KYC, we're not just looking at it from like, let's maximize the approval rates. It's also how do we do that while decreasing fraud. Two things you would, I think, intuitively think aren't possible at the same time, but when you work with a company that has that kind of capability, you can actually move one rate in the up direction and then the fraud rate, downward, and those things aren't doable with the right partners. So I think one of the things we've learned is to try to look at vendors that are able to leverage that kind of data or know-how and try to, provide a couple more solutions around what we're looking for rather than working with people that are really good at just doing one thing.
Thanks for sharing those insights. Always good to hear where we make mistakes in the past and figure out how to remedy them. We wouldn't be where we are without that for sure. Well, kind of a good segue, from a regulatory perspective, talk about, KYC checks and identity. And obviously it's been quite the theme today. And Fido speaking up here before we came up. Talk to us a little bit about how your business is regulated or how it may be different than traditional, if you were talking, you called yourself kind of a bank, right? But you're not a traditional bank. But you're moving money and you're transacting and all of those things. Talk to me and this audience about the regulatory environment today, what you see as far as where that's going, and how that can help in fraud prevention in general.
Yeah, for sure. So we're regulated under kind of game of skill and fantasy specific laws on a state-by-state basis. That includes stuff, like I said, identity verification, KYC requirements, but also things like protecting consumer rights, right? Like we're required to segregate player funds completely in a separate account, as you can imagine, and completely different rules from what a bank can do with their customers' deposits versus what we can do with ours. And we're expected to keep that cash on hand plus any liability on hand at all times. So we operate very much like gaming operators or traditional casinos, as you may imagine. Obviously, we're on the other side of the fence.
Yeah, that sounds really complex, actually.
For sure, and I think the big complexity with our business is so different and segregated on a state-by-state basis that, like, one of the things that we've just worked into our technology strategy and fraud strategy from the get-go is being very nimble so that the same thing that works in Texas is not going to work in Tennessee, that's not going to work in Jersey. Different compliance requirements, AML requirements in some of the states that are more stringent with their licensing requirements. So we need to make sure we have things like transaction monitoring, as you know, and be able to surface anomalous behavior and submit reports to SARS reports to FinCEN if we need to in certain cases. And so there's a lot of these considerations, and I think the most complex thing about it is that it is on a state-by-state basis. And so we've just built our framework to be able to be nimble and operate there. Where I see it going is, we want to continue to be heavily involved in kind of the lobbying and legislation with regulators as we go forward and make sure our category is clearly regulated and defined going forward. We want to continue to expand our digital footprint. We're currently in 31 jurisdictions, including Canada. But have plans to grab a couple more licenses and continue to expand our offering. And so Working very closely with the payment processors, all the way down to the card networks like Visa and MasterCard to make sure they understand what we're doing, make sure we're compliant, we have a voice when it comes to merchant rules, chargeback rules. These are all things that we're very exposed to, and I think obviously because of the amount of money that's flowing through the gaming operators, they have a big voice at the table when it comes to these things. So I think we can be pretty influential when it comes to shaping legislation around fraud. Obviously, as gaming operators, we need to be very mindful of, I think, first-party fraud when it comes to responsible gaming and people that may be playing above their means. Then there's the whole third-party side of it, and I think just like they were talking about in the last talk, it's so lucrative when it comes to gaming, and these operators have such a big target on our back. We need to be, we kind of need to be a step ahead because I think it's amazing, honestly, how sophisticated some of these fraud actors are. It's honestly like she was saying, it's impressive for lack of a better term.
Yeah.
So we just need to be kind of that much more ahead of it.
Yeah, and they're using AI to get in there, and we're fighting it. We call it fighting AI with AI to try to just combat it. Yeah, you guys might have quite the target on your back, I would imagine. I understand intimately compliance, and we actually are very in tune with the data privacy laws all over the world for our business and what we do. So I can appreciate what you guys must be going through on the back end. On the front end, how fun, and it's betting, and it's we're winning money, and on the back end, you guys are doing quite a lot to stay compliant. Can you talk a little bit about some of the partnerships that you guys have created and the impact that has had on your business? What kind of role that's played?
Yeah, I mean, again, I think from a fintech lens, I think there's critical vendors we work with. We have really good relationships with Visa, developing better relationships with companies like MasterCard. The payment processors, again, being in gaming and trying to build this platform for kind of the next generation of gaming fans, we want to be on the forefront. We want to be able to offer Apple Pay, Venmo, things that we know are very frictionless and are going to appeal to our core demo. It's very different from bank transfer, which maybe the last generation has been. Like I said, if it takes more than 30 seconds, the customer's gone. They're not waiting around. They're deleting that happen. So those are things that are constantly top of mind. I mentioned SoCure has been a great partner on the identity verification and fraud side. They're one of the more up-and-coming companies in that industry, and they've been a great partner to us and really act like a data company. And then, I think even now we constantly kind of expand our fraud stack. I think one thing that we're learning is it's interesting to see how a lot of these vendors are starting to utilize all the data they've built over the last decade or so, anonymize it, and then offer it back to their operators. We're starting to see a lot of, rather than view it as us against our competitors mentality. I think there are certain aspects where we can do data sharing to the benefit of the entire industry. Specifically, fraud and third-party synthetic fraud. It's in our best interest to share that data in the right way with all of our contemporaries as well, so that a rising tide kind of lifts all boats. We're not interested in fighting the fraudsters and our competitors. So we'd rather just focus on our competition.
Right. Yeah. I think a feedback loop is always a good thing. Well, so what's the take on the outlook of the industry from a long-term perspective, and the role that fintech will play for you guys moving forward? Do you see the industry continuing at the pace that is today, and if so, why?
Yeah, it's a good question. I think we definitely expect growth ahead of us. I think there's obviously a lot more contemporaries, like I said, joining the space, and I think when people see the amount of money that is flowing through, the payment processing and the operators, I think fraud is continuing to just going to get more and more sophisticated. Every year we're dealing with more sophisticated schemes. Account takeovers, third-party synthetic fraud, biometric spoofing, like they were talking about in the last session. So those are things that are definitely at the kind of top of our mind as we continue to scale. The outlook for the industry, I think we want to learn from the mistakes that were made in more mature markets like Europe, like Asia, when it comes to things like responsible gaming. Credit cards are big in the US, it's just like they were talking about in the last one. So we want to make sure we've got the right education, right tools on our platform to make sure people are playing above their means, and this is, more of a venue of entertainment rather than a way of making money necessarily. But yeah, we're in this interesting phase where, we focus, and hyper-focus on kind of finding product market fit and scaling our core product. And now we're looking to expand our mission and vision and really kind of make the jump to kind of that sports entertainment lifestyle brand. So we're looking at how do we further expand our portfolio of products. Our stated mission is to kind of be the ultimate second screen when you're sitting down to watch sports. And so it doesn't have to be transactional, right? Whatever kind of manner that comes in, I think we're starting to see a very active, engaged community kind of come out of PrizePicks. So it's a very exciting time for us. We feel like we have a real shot at building a real gaming entertainment brand that kind of outlasts our lifetimes and can give the big guys a run for their money. And so that's kind of what we're focused on over the next few years.
I love it. I wouldn't want to compete against you. You sound like you've got a pretty good thing going. From a geographical perspective, are you guys looking to expand further globally? What are your plans there?
Yeah, international expansion is definitely a hot topic for us. Looking at it, probably not this year.
To further complicate things.
Yeah, exactly. I mean, as you know, Amy, I think it starts with even finding a banking partner in those countries and then a payment processor and
There's a lot of things.
piecing together all the vendors, exactly. And so we've been talking to our existing vendors about how we continue to expand into territories like Canada, potentially Australia, other international opportunities, but we feel like we have so much land left to grab here domestically that we're just going to focus on the US for now.
That sounds like a good plan. Yeah, you don't want to get too far ahead of yourself. Well, I think that's all the questions I had for you. I can open up the floor and see if anybody has any questions for Jay. He did such a good job. No one has any questions. Oh, they all want drinks. Well, thank you guys so much for joining us today, and thank you, Jay, and congrats on all your success. And we'll be following PrizePicks. Maybe I'll quit my job and start betting for a living. No.
Appreciate it, Amy. Thank you.